Hey everybody, welcome back to another beautiful day in real estate. It is Friday. We're going to dive into a few things, the Iran peace deal that is potentially here, and we're going to talk a little bit more about the financial crisis that we could be seeing here in the next few years. Now, before we do any of that, let's jump into interest rates. Interest rates, you guys still sitting relatively around that 6.5 to 6.1 range. BAFHA around 6.12 to 6.14 and conventional at 6.59. Everything is moving slightly down, which is good news. Why? Well, because apparently we have a peace deal that is imminent. I can never say the word. But essentially, it sounds like we almost have a deal in place, which is going to be very important for us because we have to be able to see that before we can see real positive news in the market, right? Everything kind of fell from 4.64 around that resistance. I guess the high was 4.69, all the way back down to 4.44. This is good news. That just means that there is more demand for the bonds again, which is causing interest rates to drop slightly, which is making everybody feel a little bit better inside, right? Not only that, but oil also fell below that support at $85, $88 a barrel. This is WTI crude oil, and this is the daily chart. It's very important that we know these sort of things because when you're looking at oil and you watch my video and you say, "Oh my God, you are totally wrong. Crude oil is sitting here. This is WTI crude." And I pay attention to that one. That one's the one I work well with. So, anyhow, we're down to $87 a barrel. If we do see a peace deal, I expect moving into the weekend we could see this drop. Holy, it's been a busy day, you guys. Busy day, but we can expect a barrel of oil to drop below $83 a barrel. That's my expectation. If we don't see the peace deal happen this weekend, then more than likely we'll see some dead cat bounce coming into the beginning of the week where it's going to pump up slightly before it heads back down. So nothing too negative going on in the market right now. The S&P is at all-time highs again, which is also very nerve-wracking a little bit, and that's going to lead into our next conversation. So the S&P 500 is currently in blow-off top stages right now. We've broken through a channel that has been forming for over 9 years, and it finally broke out. It retested it very nicely, actually, and we are off to the races. So that just means right now that and I said it yesterday, there's absolutely no reason that the S&P 500 should be sitting at all-time highs. I mean, the only reason that it's pumping is just because there's these rumors that there's going to be a peace deal in Iran. I mean, this is what we've been talking about with Iran right now. This is currently what the deal is that they're working on. So it's official. President Trump is staying at the White House to work all weekend, as these are the terms for the 60-day Iran proposal. Unrestricted Strait of Hormuz and mines removed within 30 days. U.S. blockade lifted. Iran can sell oil. No nuclear weapon agreed by Iran. This is important. That was a big thing that was preventing the deal from moving forward. Uranium disposal and enrichment discussions begin. U.S. discusses sanctions and monetary relief. Humanitarian aid and goods to Iran discussed. Israel. Istanbul war ends in Lebanon, and then plus Trump wants the Arab countries to join the Abraham Accords. History could be made. So essentially, what they're doing right now is they're very close. They got a majority of what they were looking for in this deal, and by doing so, it's just going to create another ally in the Middle East, right? By doing something along those lines. The whole point of this is to not have a war that continues, right? Not to continue a war that's going to create more and more chaos. However, the damage may have been done already. We might already have seen that the damage is kind of there. I mean, we have probably, it's going to be a minimum of 6 months till we get back to normal, or if we start to see a normal, right? I mean, prices have went up significantly just on food prices and stuff. That's not just because of the war, but in the last few months they've went up. Gas is up 80, what was it, like 50 some percent, 55% in the last 2 months, which is not great, right? So until this stuff kind of gets normalcy once again, or until we kind of get past this, I mean, this is the big thing that's really dragging the markets down right now. But once it's done, I do believe that we're going to see a bit of a blow off top in the rest of the market before we see a major crash. And the reason is because what happens after war? Prosperity. Well, this prosperity might be a short-lived prosperity just because of where we're currently sitting and the amount of issues that we do have, right? So the Warren Buffett indicator, it hits all-time high at 236%, the most expensive stock market valuation in history. Now, I've been bringing this up for quite some time, you guys. The stock market is way overvalued, and that's why I haven't put a ton of money into the stock market. I'm actually just waiting with money on the sideline, because the biggest issue right now is people think, and I've seen it multiple times, people are selling their houses, they're selling and taking their money and leveraging it and putting it into the stock market. When I see that, it makes me want to go nowhere near something. when there's that much confidence in the market, I just don't feel comfortable. That means that there is overvaluations. Like we talked about yesterday, AI stocks are missing, or AI returns, excuse me, quarterly earnings, and somehow they're still pumping and they're moving in the right direction. I don't understand how. It makes zero sense, but it is what it is, right? We just have to keep working with what we got. So that's why I've been paying more and more attention to this stuff to make sure that as more red flags pop up, we're paying attention so we can be making our moves correctly. Now, the other thing that was kind of interesting that I saw today is that the 2020s are now the most inflationary decades in history. US CPI is just inflation has averaged 4% for so far in the 2020s, the highest decade since 1980s. This is more than double the average in the 2010s at 1.8% and well above the 1990s and 2000s. So we are seeing a time, you guys, where inflation is becoming more and more and more of a problem. So those of you that don't know, in 1980 is when Reaganomics was implemented. Reaganomics is where they basically deregulated the market, and they, by deregulating the market, there was a ton of growth, which led to the time frame in the 90s, 2000s, and 2010s where we had low inflation, but we had high productivity. I think that's what we're leaning towards now, which means there's going to be some sort of, the crash to me makes sense, right? You have to have some sort of downward turn or to find a new bottom and work your way up from there. But not to get too sidetracked, I guess. Since 1950, the only periods with higher inflation were the 1970s and 1980s at 7.4% and 5.1% on average, respectively. This comes as inflation has been above 2% for 64 to 70 of the 76 months so far this decade, peaking at 9.1% in June 2022. Oh, those are good times. By comparison, during the 2010s, inflation was above 2% for 49 of the 120 months, with a peak of 3.9 in 2011. Inflation remains way too high. So everybody's waiting for interest rates to drop so they can get into a house. But the problem is you're more than likely not going to see interest rates drop. If you do, it's going to be very slight at the beginning of this fall. I don't expect to see major moves until we see inflation under control. How do you make inflation come under control? You have to create productivity and you have to create more jobs. Right now, the jobless report came out yesterday. That was not looking great. The other thing is, like we talked about, the S&P surges to its highest level on record as reports the U.S. and Iran have reached a deal, which is pending President Trump's approval. So he's going to spend the weekend reviewing this proposal and finding out, are we going to see a peace deal come Monday? To me, it makes sense that this stuff is all going to be over by 4th of July. It's the 250th birthday of the United States. I really highly doubt they're going to continue a war through the 4th of July. And right now, it makes more sense to get this over with, to get it done with, so that they can move on to more important things moving into the 250-year anniversary for the United States. There's a lot of interesting things that happen in the last few weeks, in the last few months. Everything just seems like it's kind of all over the place. But I'm here to tell you, everything is going to be okay. Okay? You just have to kind of pay attention to what's going on so that you can be prepared. Now, here's where the AI bubble continues to make me concerned. I've talked about it before, but the AI bubble is here. We're in it. We're living it right now. And we're in the middle of the internet bubble, but on steroids. Because what's happening is, well, let's just talk about it. In the last 30 days, Microsoft cut Claude Code's license. Uber blew through its AI budget in 4 months. Uber COO questioned AI spending. Fortune 20 companies started slashing token usage. One firm burned $500 million on Claude in a month. H200 rental prices collapsed from $7 or $7 an hour to $4 an hour. These people are actually paying the AI bills and are pulling back. Wall Street is still pricing perfection. The market's overconfident and the money is starting to not flow anymore. That is your problem. That is your big issue. And until we see that change, and money starts flowing back into this, I'm going to be very skeptical. These stocks are overvalued. They continue to see valuation increases without any sort of increase in returns. And productivity might be going up, but there's not really... The way that companies are making money now is just firing people. It's not like the companies are really growing yet. We're in a time now where this AI is going to be very, very beneficial over the next decade. But right now, we're not quite there yet. And until we can get there, we're kind of stuck. And we're going to see this return. We're going to see this bubble pop. And everybody's going to say, well, AI is terrible. We shouldn't use it. It's costs everybody money. It's terrible for the economy, blah, 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 blah. And then in 5 years, you guys are all going to be using it like it's a cell phone, right? Internet started with dial-up internet. Here we go. I've got a computer in my hand, 24/7, all the time. It takes time. It's slow. And that's why it's important for us to know what's going on, right? Because this AI bubble will come to an end. Chip stocks are going to come back down. There's no way. I don't believe it. There's no way that these things just go up, 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 up. They never come down. They're going to come down. It's part of how trading works. Not a 10%, not a 10%, from $100 to $90. No, I'm talking 80, 70, 60% drops in the pricing. And once that happens, then we can start to work on building a base and going from there. But right now we're overhyped. There's too much overhype going on right now. And the reason the S&P 500 is doing so well and moving into a blow top is because of technology stocks. So it's because of chip stocks. It's because of AI stocks. And when that money is no longer going to be there, what do you think is going to happen to the S&P 500? It's going to come back down as well. The blow off top is where everything goes up significantly over a short period of time, and then it falls off a cliff. And right now, we're about to fall off a cliff. We're not quite there, but we're getting there. So that's why I'm working on creating as much cash as I can. Warren Buffett's company, Berkshire Hathaway, has $397 billion in cash reserves. Why? Because they see exactly what we're talking about. Michael Burry has major shorts in NVIDIA and in Palantir. He sees what's coming. We need to be paying attention to this, you guys, because the markets will crash. Everybody's going to say, what's the point of being in the market? It's terrible. It screws everybody over. Nobody can win, blah, blah, blah. Create a plan. Create an exit strategy. Don't be entering into a green market. Enter into a red market. I'm buying in portions of a market that are very red right now because I know they're going to come back to their standard levels at the very least, if not see new all-time highs. But right now, the market feels terrible. But I know what I'm investing in. It's all about a plan. It's about understanding, right? So, I mean, that's really all I have today, other than the last thing I'm going to touch on. U.S. savings rate have fallen nearly 4-year low in April as household struggles surge. People are living off their credit cards right now. They have student loan debt. Groceries are expensive. Rent continues to go up. Car payments continue to go up. There's more and more people that are struggling just to make ends meet, let alone save money. It is something that I've been disconnected from for a while, but then I started kind of watching a couple videos, and some people are really struggling just to make that last bit of money go into their pocket, that last bit of last $10 for gas. They're struggling. Should we buy gas or we get food? It's really frustrating because we're in a world right now where it seems like nobody seems to care about everybody. And the thing is everybody deserves love. Everybody deserves some help. And right now people feel like they're not being helped. And until we can see some change, and that's where that universal basic income could come into play, right? Where they're going to just start providing people with a certain amount of money every month saying, here, this is to help you out. But really, it's a way for the government to supplement income. That possibility is still very, 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 very plausible. It could be there sooner rather than later. But, no matter what we see right now, until we see inflation under control, we see more money coming into the system, and we see more production and growth, we are going to continue to see people struggle. Unemployment is lower. People are working, but that doesn't mean people aren't struggling. And that's important. People are struggling. So we need to be paying attention, and we need to understand these markets. Today, I didn't really have a whole lot to jump into. I pulled some data. I just wanted to kind of talk about it. But those of you that made it all the way through, I do appreciate your time. I'm super excited to continue moving forward with this channel. We're going to keep building it in different ways. We have different things in the fire right now, a couple irons in the fire. And as they continue to change, we'll get better, and we're going to be ready to help out as best we can and provide more value for you guys. So thanks for watching. Make sure to like and follow, and we will see you on Monday.